Hi everyone, my name is Starling Thomas Allison. I'm the principal consultant and founder at Halisi Consults, and today I will be sharing about accessing funding opportunities for your business, whether you're a startup, a small business, or a medium-sized enterprise. So first of all, I would like to start with talking about what Halisi does. Halisi Consults is a business development consulting company that helps startups, small businesses, and medium enterprises launch, grow, and thrive. So our watchword is to help businesses launch, grow, and thrive, and we do that through our business planning services, our growth marketing services, and our finance advisory services or fundraising services. So we help startups and small businesses and medium-sized enterprises connect with potential investors and also get them ready for investors. So we offer an investor readiness service, which is I would probably say is our most popular service so far. Um, that being said, so let's get right into it. So, what is fundraising? What is this thing? First of all, there's a lot of misconception around the concept of raising funds for your business. I would say a lot of entrepreneurs and founders often kind of confuse or conflate what it means to raise funding for a startup and what it means to raise funding for um, a normal business. So, what is a startup and what is a normal business? Now, a startup usually is a technology based company, it's a technology startup, like it's a technology based small business that can make multiples and multiples of revenue at a very, very high speed, at a very, very high growth rate, and also can acquire customers from all over the world based on the technology that this company has built. So that kind of company would have developed a software, so to speak, that offers a service that can be replicated to thousands and millions of people at the same time. Examples of companies that are started out as startups and became bigger companies are companies like Amazon, Google, Facebook, and so on and so forth. So companies are along those lines. Even Microsoft at some point could have been termed a startup, even though it's a pretty big business now. So startups that we have in the Nigerian space are companies like Split, Codabank, Brass, and so on and so forth. So companies that provide technological solutions to a large number of people that have potential for scalability. So that's the key word when it comes to startups. Startups have to be incredibly scalable at the very high speed of time. So and it's this way because it's a unique type of business that just came into the world sometime at the beginning of this millennium. So startups are technology based businesses that can scale globally to a wide range of customers. Their business model must be repeatable and scalable over time for them to get monthly recurring revenue and annual recurring revenue and be able to reach a wide range of customers all over the world. So their customers can be individuals, can be companies, etc. But they must be scalable in this way. Now, for small businesses, everybody knows what a small business is. Small businesses are businesses like the mom and pop businesses that start up, um, not to be confused with startups, but they start up small and then they eventually grow and achieve stability and can then grow into a medium-sized enterprise or even a large corporation. A lot of businesses started small. Apple started really small. McDonald's started really small. Apple started in, I think, the garage of Steve Jobs or his co-founders. So, but those businesses eventually became large corporations over time. So small businesses are businesses that are literally just starting out, but that start small and they have a limited number of customers that they can serve at a time. Sometimes small businesses are in a particular location, so they don't necessarily serve a wide range of customers all over the world in comparison to startups. But some small businesses have the potential or ability or the business model to break out of that small business mold to become medium-sized enterprises and then eventually become large corporations and then eventually become multinationals. So that's for small businesses. We've spoken about startups as well. For medium-sized enterprises are businesses that have probably been running for like 2 to 5 years, have achieve some stability in their income flow. They have structure, they have solid business structure that allows them serve their customers on a repeatable basis. Um, Medium-sized enterprises would typically have like about 50 to 500 staff. Um, they will be making sizable revenue annually. For Nigeria, I think medium-sized enterprises should be making between 500 to 2 billion naira annually, and maybe that would be like what $2 million upwards in USD. So that's what I qualify as medium-sized enterprises. Um, so let's get into it. So what are the funding opportunities that exist for these different types of businesses? So when clients come to us, they usually come to us for um, equity funding. They want to give out equity so that investors can invest in their company, and then so that they can, have money to do certain things in the organization, maybe improve their products or get more products, or improve their marketing, and so on and so forth. The thing is this: that type of funding is typically reserved for tech startups. Tech startups can easily access equity-based funding in the sense that, okay, they could give away 10% of their company to investors for a certain amount of money. So they could give away, let's say, 10% of their company for $100,000. If you give away 10% of your company for $100,000, that means that your company is valued at $1 million, because $100,000 is 10% of $1 million. So that's easy to do, right? That's easy math for anyone, right? So it's very clear what the investor is getting. The investor is getting $100,000 for 10% of the company. And then as the business grows, the business progresses, the valuation of the business definitely would change. And that is what the investors that invest in tech startups are looking for. They're looking for businesses that have potential to increase their valuation quickly, like exponentially, over a short period of time. So what you see is that some tech startups maybe raised pre-seed investment, for example, of or seed investment of $500,000, and that was for 10% of their company. So meaning that company is valued at $5 million. So what you now then find is that maybe in 1 year or 2 years down the line, that company would then now raise maybe an additional $1 million that will now be quote unquote their series A. So what that means is that they might raise that $1 million for maybe 5% of their company. What that means is that that company that has raised $1 million, 5% of their company, if you run the numbers, it means that the company is now valued at $20 million. So the person that gave them $500,000 for 10% of the company has essentially um 4x the money that they invested. So what that investor can now do is say they want to sell that equity to the new investors, or they say they want to cash out. So the business owners now have to decide, if we want to cash out this investor, and then maybe they can retain a part of the equity in their business. So when you see it broken down that way, it's a bit easier to comprehend, in the sense that um, the company went from being valued at $5 million to being valued at $20 million within the space of a year or two. And then the investors that invested for 10% of that company are then now able to access literally um, $2 million value of that company for 10%. So meaning that their investment has gone 4 times in a matter of 1 year. Now, for small businesses and medium-sized enterprises, those kind of numbers are a lot more difficult to attain. I won't say very. They're attainable, but they're a lot more difficult to attain, and they will take a longer period of time for you to attain those kind of numbers in your business, where your business was valued at $5 million in 1 year, and in next year is valued at $20 million. That typically only happens with tech startups. So with tech startups, you have a opportunity for exponential growth, and that makes it easy for investors to come in with their funding and say, okay, we're just gonna, you know, take a percentage of your company for this amount based on what we've seen so far, and based on what we believe you can build. So there's a lot of factors that go into why investors decide to invest in tech startups. Things like the makeup of their team, things like the opportunity that exists in that industry, things like the numbers that they already show. So for tech startups, month on month, their numbers keep increasing. Their numbers should be increasing month on month. So these different metrics that the investors would look at would then now decide whether or not they decide to invest in that tech startup. Now that being said, for small businesses, there are a lot of opportunities still. It doesn't mean because tech startups are the sexiest things now that there's still no funding opportunities for small businesses. The issue with small businesses and fundraising in Nigeria is that not a lot of organizations are gonna give you capital for your business against your books. They're probably going to give you a collateralized loan, in the sense that if you're saying 20 million naira a year, you can easily get a loan of 3 to 4 million naira easily with those numbers. If you're doing revenue of 20 million naira a year, you can easily get a loan of 3 to 4 million naira. And when that is when you're then now trying to speak to financiers, because it won't be investors in this case, it will be financiers. So small businesses are more palatable to organizations like microfinance organizations, trade cooperatives. Um, there are specific businesses that invest only in small businesses because what they will do is they will give you capital that you need for your business, and then go on to say, okay, we want to receive this capital back over this period of time. So it might be 6 months, it might be a year, but it's typically no longer than 24 months for most MFBs. Sorry, for most microfinance banks. I'm using abbreviations because I encounter these words every day. So for most microfinance banks, for most financial organizations that give capital to small businesses, they typically would give you for a period of 6 months to a year, maximum 24 months, but I rarely see that. And they usually prefer to give it over against a collateral. So your collateral could be a vehicle or an asset you own in your business. It could be equipment, but you have to value that asset and then present the valuation documents to these financial institutions. Now for medium-sized enterprises, I'm saying medium-sized enterprises separate from small businesses because in Nigeria we typically lump them together, but medium-sized enterprises are completely different in the scale of their operations, in terms of the business structure that they have. So in small businesses, you might find that okay, it's just the entrepreneur and a couple of workers or staff that are working with that entrepreneur. In medium-sized enterprises, you see that you have like 2 to 3 or 4 reporting layers, in the sense that you have the managing director or executive director, then you have managers, you have supervisors, you have officers, and then you have the people that work under them. So it's like 3 or 4 layers of hierarchy when it comes to medium-sized enterprises. That's it. That's medium-sized enterprises that is well structured. Um, so based on that structure, and based on the scale of operations, they can be making, upwards of 500 million naira revenue per year. And this is where it gets interesting because if you're making those kind of numbers, you can easily, seek financing of 100 million upwards, maybe 100 to 200 million naira financing based on your books. But there'll still need to be some form of security in terms of a collateral. Now, a lot of people are averse to collateral because they feel like, oh, it's unfair. That I have to have a property in a big city like Lagos or Abuja to be able to access capital that I need for my company. And it happens a lot. I see it with a lot of clients. It's very heartbreaking when a client's business is perfect for funding, but they don't have an asset that can help the financier de-risk that funding exercise or that capital investment. So for small businesses and medium-sized enterprises, financiers typically would ask for a collateral. Now, collaterals come in different forms. People use vehicles as collateral. In the case of small businesses, that's acceptable. In the case of medium-sized enterprises, collateral will typically be an asset that a physical asset, most likely a building, a functional building that that would help de-risk the capital investments that the financier is making. So when I say de-risk, I mean in the sense of um, investors want to be comfortable making capital investment into your company. So they have to be comfortable knowing that no matter what happens, their money is secure. The capital they invested can be recouped over time, no matter what. So that is why for small businesses and for medium-sized enterprises, financiers typically would request that you have collateral. And it's probably a hurdle that is very difficult for a lot of people in Nigeria to crack or scale, but it's the nature of the market that we operate in. In Nigeria, we typically don't have the systems or the credit facilities that are available to businesses in the West, in the US, America, Europe, and Asia. We typically don't have it. We don't have a system, an economic system that allows for financial organizations to give out loans and be comfortable not taking any collateral in exchange for the loans, because we don't have credit systems that help you validate who is who. And I would have to applaud the Nigerian government at this point, because I know that they are trying their best, even though they could do better, to get these credit systems in place. So that's why you're having things like BVN or NIN. I can't remember what BVN is. BVN and NIN. NIN is your national identity number, I believe, and BVN is like biometric verification number. So that's the reason why the government came about this thing, so that it would be easier for financial institutions to give out this, to be able to provide credits to Nigerians. So if you noticed, when BVN came into Nigeria, a lot of credit companies came in, shortly after, because there was now a system to be able to track people and how much they've taken. There's now credit organizations that now record every loan or every credit transaction that's taking place within Nigeria. And these systems exist. So a lot of people don't know about it, but they exist. So it's getting better, and I think like maybe in the next 5-10 years, we'll start seeing loans of sizable loans that are not collateralized. That being said, so for medium-sized enterprises, there are bigger opportunities for financing, obviously, because the medium-sized enterprises already have those numbers. They're making 500 million and above, um, you know, every year. And it's easier for financiers to say, okay, based on this person's books, based on the numbers that they do, we can provide them with capital investment that they need for their business. And that makes it easier for those business owners to grow their business and to scale their business. So there are a plethora of options available for these medium-sized enterprises. And yes, somebody said bank verification number. It's biometric verification number, because you use your fingerprints, and I think they take a picture of your face as well for you to get a BVN. So yes, but thank you for that, Anita. So that being said, so for medium-sized enterprises, there's so many ways you can seek financing. You can go to the commercial banks. So you have your Zenith, you have Access, you have Stanbic, and so on and so forth. GT, those are the most popular ones. I think First Bank does as well. The commercial banks have their own requirements, which are um, they're a bit stringent. So obviously, the bank already knows what goes in and what comes out of your account, so it's easy for them to give you the financing that you need. That being said, um, with commercial banks, their interest rates are typically not the most favorable for business owners. But some business owners have businesses that make margins that are enough to take on those kind of loans. So with commercial banks, I think the best rate I've ever seen is probably 25% interest rates per year on a loan of like 200 million euro or so. And that's a really nice deal, to be honest, because it goes as high as 30% per year for banks. For even for some microfinance banks, it goes as high as that per year, that they will charge on the loan. And some of them don't do reducing balance. I'll explain what reducing balance is in a minute. So You have the commercial banks, one that's one option. Then you have the private financial institutions. So there's some private financial institutions that operate as banks, but they are not deposit receiving banks in meaning that they are not commercial banks like the popular ones that we see. So they are private banks that are owned by financial experts that take people's money and help them invest it in different types of instruments and different types of assets. So one of the things they invest in is typically businesses that can take that money and turn it over for them to make um, a percentage on the capital invested. So these private financial organizations they are bound. Some of them are microfinance banks, some of them are holding companies, some of them are they call themselves something something capital. So when you see a company that is something something capital, they are usually a type of bank for high net worth individuals to keep their money with and then help them invest that money in different financial instruments. So they could invest in treasury bills, in bonds, both in Nigeria and outside Nigeria. They could help invest it in you know industries that make high returns like real estate or oil and gas. And then finally, they can also give that money out to or invest that money in businesses, in medium-sized enterprises, in small businesses. And so this is where the opportunity lies for small businesses. So some of these organizations, they definitely have their requirements. Their requirements are pretty stringent as well. So their requirements would be things along the lines of they would want to see some form of collateral. They would want to see your books. They will want to see information about every director that is registered with your organization. They would want to see some form of potential in the growth of the organization, as the years goes on. They would require some, documents like maybe guarantor, etc., and so on. So this typically this type of business. Yes. So Jesus. Yes, as I was saying, so typically these financial organizations would ask for really stringent documents. They will ask for your projections. Sometimes they ask for feasibility plan or feasibility study or business plan. They'll ask for your investment proposal. They'll ask for your pitch deck if they deem it necessary, and so on and so forth. So there's an entire list of documents that they would send to you typically when you get into conversation with them. Now, the probability of you getting funding of capital investment from these organizations is really dependent on how good your books are and how viable they believe your business is. So if they look at your cash flows monthly, they'll be able to tell whether or not they should invest in you alongside the other requirements that they would ask of you. So that's for the private financial institutions. Now, another option for small businesses and medium-sized enterprises would be the government institutions. Now, there are government institutions that are set up solely to provide funding or financing for business organizations in Nigeria. So, an example is Bank of Industry. The Bank of Industry, via the Central Bank of Nigeria, helps to provide funding or financing for businesses. In the past, the interest rate from Bank of Industry would typically be between 9 to 11% per year, but because of the way the economy is going, it's really risen, and I'm hearing of 15% interest per year from the Bank of Industry. Forgive me, for the private institutions, they offer interest rates of, I think, 20% upwards as well. So it's sort of similar to the commercial banks, but they are easier to approach. So for the government organizations that provide financing for businesses, so you have the Bank of Industry. If you're looking to acquire assets, there are government parastatals that are directed to fund asset acquisition. In fact, they're particularly government parastatals that are directed to fund assets such as trucks, because the Nigerian supply chain needs to be subsidized by private organizations that use trucks for logistics and haulage to move across the nation. So organizations like Lescon, so that's the leasing company of Nigeria, offer financing in this regard. Um, what other organization? There's NISA. NISA is for agriculture companies. So you can approach them for financing if you've been in agriculture for I think about 3 to 5 years, and they have pretty decent interest rates as well. But it can help you secure the funding that you need if you are in that industry. Now, another organization would be the central bank itself. So the central bank itself actually provides some financing options for businesses in Nigeria. I'll give an example of a program that is ongoing called the 100 for 100 program, where they're giving financing to medium-sized enterprises or large enterprises that need upwards of I think 100 million naira, and they're giving it out at 10% interest rate, which is amazing. But they have very stringent conditions again for you to access this financing. So these are some of the financing options that are available within Nigeria, both from private organizations, from commercial banks, and from government organizations. That being said, there is funding available for medium-sized enterprises and for small businesses as well, that have the numbers and the cash flows to back it up in on a global scale. So there are the financial institutions that exist in Nigeria exist. So do other financial institutions exist in different countries all over the world. And the financial institutions, they run pretty much the same way. They are set up to help high net worth individuals or even the country as well to invest their money into financial instruments, and be able to make a return on investment. And one of the ways they make a return on investment is by investing in businesses that would offer them a good return on investment over time. Now, that being said, the financial institutions that exist in these different countries have their requirements. And to be fair, coming from this part of the world, not all organizations are open to funding African businesses. Not all organizations are open to financing businesses that operate and serve the African market. I mean, it's getting better. I mean, it's way better than it was 5, 10 years ago, but it's still a work in progress. So the work really is to find the organizations that are willing to fund companies in Africa or companies in Nigeria that they offer really low interest rates, and conditions are palatable to the business or to the business owner. That being said, some requirements of this type of organizations typically would be things like your audited financials. So you have to have your books audited. You have to have good cash flows, in the sense that you must be making for them to come in with a USD investment, your revenues must be you know at least $1 million annually at the very least. And that being said, typically they review each application on a case by case basis. So it doesn't mean that if you have all the requirements, you're going to get the fund financing. They're going to review every document you present to them. They're going to come in country, view your assets, view your business, look at how you run your business, ask you questions about your books before they now give away their money. This part of it is called due diligence. Due diligence part is usually where all a lot of businesses fall off, because most of the time people can't really defend what's in their books. Um, but there are a lot of success stories still that exist in Nigeria for financing. So just to go over what I said about financing options, for like global opportunities for financing options for small businesses and medium-sized enterprises. I said that there are opportunities, global opportunities that exist for small businesses and for medium-sized enterprises to receive financing from international financial organizations that can provide um, upwards of $1 million in financing to you over a long period of time with good moratorium. A moratorium means a pause in your repayment schedule, so and with good interest rates as well. So typically when I like encounter a business that is medium sized enterprise, that has good cash flows, I typically would recommend that they go for the global opportunities that are available in for financing for small businesses. So I would advise that you go for international financial institutions that are known, that have a track record of financing African companies. That typically would probably be the best option that exists for medium-sized enterprises today. So the other things that you could possibly be asked for are things like your business plan or feasibility study, your financial model and your projections, your management accounts if you don't have audited financials. But if an audited financials is compulsory. um what else? Any assets you own, they'll want a full documentation of all your assets and all your liabilities. So everything has to be in order when it comes to documentation, especially when you're dealing with international financial organization. There's no wuru, there's no shortcut. You have to make sure that all your documents are properly done. You have to make sure that all your um, investment proposal, pitch deck, business plan, financials, everything you're sending out is done properly, is properly documented. Audited financial statements done properly, and presented in a data room or just with a simple Google Drive to document all your um to put together all your documents essentially. That being said, typically it will take probably 3 to 6 months to secure that kind of investment, depending on how well presentable the company is and how well documented your financials are, and your company operations and your growth plans, etc. Um, there are other requirements that those type of investors would typically have, and these requirements would be things along the lines of securing the loan, because like I mentioned, Nigeria's economy is not one that really allows for people to give out, or for financial institutions to give out loans without having some form of security. So that security might be a requirement for you to get a financial instrument that can be used to weigh against the loan that you seek from from these global financial institutions. If it was a Nigerian institution, they would typically want an asset in Nigeria, but for global financial institutions, because of the nature of international business, would prefer a financial instrument that they can hold in their hand that will help them de-risk the loan or de-risk the financial investment that they're making in your company. So yes, that's about it for startups, for small businesses, and for medium-sized enterprises. Now, so what are the typical things that you need to do as a business owner to get yourself investor ready for this, for accessing these funds? I would say from day one, you need to be documenting how much revenue your business is making. So on a monthly basis, you should be looking at your numbers to understand, where the money is coming from, and how you're spending money and how much profit you're actually making in the business. And if you're looking at it on a monthly basis, it will help you be able to make tweaks in real time that can help grow your business and increase your um, potential for making revenue. So have your books in order. It is very important, and also know your numbers. It's one thing to say you want to seek funding for your business. It's another thing to be running a business that has good profit margins. Yeah. So know your numbers, have your books in order. Um, take a truthful, insightful look at your business model to understand if you're really making profits or you're turning money over. So a lot of businesses are what I call turnover businesses. So there's some businesses that, every month the business is making a lot of money, but every month that money keeps going back out of the business. So you have to make sure that you are not running that type of business where this month you make 5 million naira, but at the end of the month you've used the entire 5 million naira to maybe restock inventory, or maybe invest in one equipment or the other, and at the end of the month you're left with, you can't really see what money you're making in the business. So that might be difficult for someone to invest in a company that is just turning money over constantly month on month, where there's no clear profit margin. Because if you don't have profit margins, how would an investor invest in you and be able to recoup their investment back if there are no margins there for them to even recoup from, quote unquote? Another thing is to have all your documents in order. So if you need to write a business plan, please write. If you need to reach out to us for a business plan, please reach out to us. We try to be as affordable as we can to small businesses, and so on, in helping them, get their documents together to help them get investor ready. So have your documents in order in a very concise manner, in a very organized way. Google Drive is available to everyone that has a Gmail account. You can just have all your documents together in a Google Drive. So whenever an investor requests that they want to see your documents, you just send them the Google Drive, or you email it to them, and they can have a look at all your documents at one glance. So whatever documentation that you feel that you need for the level of organization that you are, you need to get everything in order now. So whether it's your business plan, your financial model and projections, your pitch deck, or investment proposal, depending on what kind of business you operate, your audited financials, your documents of any assets that you own to show the valuation of the assets. Um, what else? Your management account if you've not finished the complete financial year. Um, your assets and liabilities properly documented. The plans that you have for the business. This should have been in the business plan, but I typically like to put in the separate documents, like the plans that you have for the business, in terms of having it as a project plan. So I typically like it, the business expansion plan to be is sort of a project plan, some sort of Gantt chart where whoever is reading it can see that, okay, for each quarter this is what you intend to do with whatever investment that you're given. um, that being said, I think for each of the business levels that I've been discussing, I should mention the documents that are probably needed for each one. So for startups, I would advise you have a business plan, financial projections, and pitch deck. um Ideally, the first document to send to any potential investor, maybe an angel investor or a venture capitalist, will be your deck. So as soon as they have a look at your deck, they might be more interested and say, okay, let me see your numbers, like your spreadsheet, your financial statements. Let's see what you've done so far and what you're projected to do, and you can send that in, if you have that. And then some investors might be very stringent and ask for your business plan. So it's better to be safe than sorry and to have everything in order. um Other documents that they may ask for is, they might say they want to see your back end if you are a software development sorry, if you're a software technology company. So if you're a tech startup, typically some investors might ask to see your backend, or I've encountered a VC that actually tries to use the product of the startup that wants to seek investment from them. They try to use it and try to go through the entire process to see how it works, to see if the product actually works, and if you really serve customers on a timely basis like you claim. Um, Other documents will probably be your term sheet. So they want to see who has invested in your company previously, your cap table. Typically we put a capitalization table in the financial model and projections, just so that VCs can have an idea of who has invested before, or how much has been spent till date in the company. That's how much you spent building the company till date. So things like, okay, we invested um maybe $100,000 in developing the product. I don't think there's a product can be developed for $100,000 today, to be fair. But that's just an example. So maybe $100,000 was spent in developing the products. Um, and then you spend maybe $10,000 marketing and so on and so forth. So it will be nice to spell this out in your financials, just so you know your potential investor can see, okay, this is how much equity you've put into your date, like how much you've invested in the company um yourself. So a lot of venture capitalists always say that, okay, they typically invest in companies that they feel like the founders have already invested in themselves. Yeah. So if you're going to show them your cap table, you're going to show that, okay, the founder has spent X amount to date, and so on and so forth, and this is how much therefore equals to that the company is valued at this amount. This is something called a VC um valuation calculation method that we like to use to ascertain the actual value of this company. So there's a formula for it. I'll share that when you become a client. Anyway, yeah. So if anyone has any questions so far, you can just drop them in the comment section, and I can answer as we progress. So typically, those are the documents that I've seen that venture capitalists or investors have asked for in my experience. Um, that being said, for small businesses need to have at least an investment proposal, at very least an investment proposal that can show that this is what you would get if you invest X amount in my company, or these are the numbers we're projected to make based on what we've been doing already. And if we feel like, okay, with your investment of X amount, we're going to make 10x or something X this amount based on the investment. So having all your documents, put together nicely, all done before you reach out to any financial investor is very paramount. So yeah, for medium-sized enterprises, your investor will typically expect you to have audited financials, a 5-year business plan, projections, a deck or investment proposal, company profile. Um, I've seen some investors ask for ESG reports. ESG reports are a type of report that they use in the Western world. We typically don't. There's not a lot of that going on in Nigeria right now, but international investors would want to know how ethical your company is. So ESG stands for environmental, social, and governance. So they want to know how your company is being run, if you're ethical in your practices. They want to know the percentage of women that are in your company. They want to know if you're not doing anything that is harmful to the environment. So that's what will be documented in your ESG reports, how you're trying to make the world a better place, quote unquote. That's what that report will show. So some investors ask for that, some don't. So it really depends on what your investor asks for, but it's always best to be 100% ready before the day comes. Yeah. So Anita, thank you for this comment. Getting all the required documents is the first step in becoming investor ready. Yes, make sure you have everything documented, because there's no fund that will be accessed without your documents properly done. I would say this is for internet is crazy. I would say this is for small businesses and medium-sized enterprises. You have to have good profit margins to be able to attract capital investments in your company. If the margins are not there, it's going to be a problem, because when the investors are looking through your books, they're usually going to look at your books with a microscope and go through every single part of your books and say, okay, what is this? How did you get these numbers? Um, how was this computed, or and so on and so forth. So what is this expense? What did you spend this on? How did you invest, this previous loan that you got, and what did you do with it? So your books have to be clean, and can you guys see me? There's nobody to even respond. I'm about to answer the next question. So I think I'm back. Yes. Brilliant. So, Mayor the Champion has a question about, oops, sorry. Mayor the Champion has a question about turnover. How can you categorize businesses on turnover scale? So, typically for small businesses and medium-sized enterprises, I would say any business doing 500 million naira and below is a small business. Thank you for that. Any business doing 500 million naira and below is a small business. It can be well, I would say a medium-sized enterprise starts for 500 million naira. Small business will probably be like 100 to 200 million naira down. Um, then medium-sized enterprise, I would say should be doing at the very least a billion naira turnover annually. A billion. Bear in mind, at the time of making this video, dollar is 740 naira. So a medium-sized enterprise should be doing $1 million in revenue. Typical American company that is small does $1 million in revenue, but because of the part of the world where we are, a medium-sized enterprise would do minimum of $1 million. Black market rate, not CBN rate, but I mean still it all falls down to the same thing. So medium size will be categorized between 500 and 1 billion. To be fair, if you want to, look at the numbers, you should ideally be aiming for, investments of like 5-10 million USD if you're really trying to scale a medium-sized business. But then that means that you should have been doing revenues of like 2 billion already, or close to 2 billion every year, to be able to access that. Because then it now makes the financier comfortable to give you a $5 million loan for 10 years, or $10 million loan for 10 years, because you already make that amount of money on your own without any help every year. Do you understand the logic? Um, Please, someone let me know in the comments if you understand the logic. It's a bit odd for me to be talking to myself. But that being said, yes. So if your company is making $1 million every year, it will be easy for an investor to give you $5 million or $10 million for 10-year period, because they know that you can comfortably pay back. And it also helps if you have a good profit margin, like Anita rightly said here, that you have a good profit margin that allows you you know increase your company's operations, or improve marketing, or scale your company generally. So yeah, that's the logic of it. The numbers of it is that you must be able to be making enough money during the period of time that you need to pay back, in the sense that you must already be doing well to get debt financing. Your business must already be doing well to get debt financing. That's the honest truth. And it's normal, like financial practice, even for local financiers, both international and local. It's normal practice. So if your business is already doing $1 million every year, if you want to take a loan for $5 million for 10 years, it's easy for the investor to give you that amount of money. It just makes your life easier, or it makes their life easier, because they know that, okay, this person is already doing $1 million revenue every year. Then we can then now give the person $5 million and see what they do with it over a period of 10 years. And then, it makes sense for you, it makes sense for the investor, everybody goes home happy, you make your repayments in time. For small businesses in Nigeria that typically are looking for amounts of like 2, 3, 5 million, 10 million naira, um, or even as high as 500 million naira. The financial institutions here would not give out their money longer than 1 year. If you see a 24-month facility, maybe, but typically it's over 1 year. And that what that 1 year means is that the amount you seek, it has to be on par with the amount you make monthly. So I'll give you an example. If you're looking for 5 million naira loan, um you must be making 5 million naira over the period of 1 year. So you must be making profit margin of at least 500,000 naira, because if you do 5 million naira loan over 1 year, that will give you about 400,000 naira to repay, minus interest rate, to repay every month. So so typically a company would then maybe look at that okay, this person already makes profit margins of like 500,000 naira, 1 million naira every month, so we can easily give out 5 million naira to that organization based off that. So your numbers really matter. How much money you're making every month really matters. These numbers really matter, which is why I always tell business owners, please register your company and start taking payments through your company account, so that we can be able to document properly for you and help you reach out to investors as well. I hope I've answered all the questions. I mean, I feel like we need to do a part two of this, but I think I've answered all the questions. So Jubril says, I think I'm investor ready, but reaching out to my investor is one major thing. So yes, so typically finding the right investor for your company is the real work. It takes some people as long as a year. It takes some people longer. It takes some people 2 years before they find the right investor for their companies. So the essence of this webinar is to demystify which type of investor is right for you. So for startups, it's usually venture capitalists or organizations that can write debt notes. For small businesses, is microfinance banks or local financiers, commercial banks, etc. For medium-sized enterprises, is also microfinance banks, commercial banks, then government organizations that are set up for financing businesses, and then global investors like international financial institutions. Those are the options that are available to each category of business, as mentioned. So that being said, yeah, Jubril is asking how I can help or how we can help to go about. So at Halisi Consults, we have a service called our Investor Readiness Service. So our Investor Readiness Service essentially involves compiling all the documents that you need for you to be able to present to investors for them to finance your organization. So our investor readiness service involves things like your business plan, your financials, your pitch deck or investment proposal, your ESG reports if you need them, management accounts if you need them, and then also helping you handle investor relations and also pitching you to organizations that we believe are a fit for you. So the investor readiness is typically a case by case basis. So if we can help, we say we'll let you know that we can take you on for the investor readiness service. If we can't, we'll be honest with you. I'll be honest with you that we can help. So it's typically a case by case basis. We have to hear from each organization what they're trying to achieve and what they need the funding for, and where they're currently at with the business. So we have to assess each situation to know how we can provide advice, which is why we call it financing advisory. So we have to assess each organization on a case by case basis to know how we can help, whether or not the investor readiness service is a right fit for you. Sometimes companies come to us too early, sometimes they come to us too late. So it's really a case by case basis on which of the financing options is right for you. And we, based on our experience of helping clients put together their documents for financing, can advise based on this. And also clients that we've helped in securing their investments, we can advise based on this. So yeah, if you need um investor readiness services, if you need investor readiness service, if you need financing advisory services, you can always click the link in our bio on Instagram to book a free consultation, or you can go to www.halisiconsults.com to book a free consultation, or you can click the link in this video. The link is right here in this video. If you check the comment section, is there. The link to book a free clarity consultation on how we can help you secure investments, or how we can get you ready for your investors. So yeah, that is it. That is the end of it. So thank you guys so much for hanging with me to the end. We'll see if we can try to do this again some other time. But yeah, thank you for your time. Thank you for joining the Halisi live webinar, our first solo webinar. Yay! So my name is Tolani Thomas Allison, principal consultant and founder at Halisi Consults, where we help startups, small businesses, and medium-sized enterprises launch, grow, and thrive. We do this through our business planning services, our financial pitch deck creation services, our growth marketing and business development retainer services, and our financing advisory or funding advisory services. So if you need any of these services above mentioned, you can reach out to us. You can send us an email at hello@halisiconsults.com. You can click the link in the bio. Sorry, click the link in the caption of this video, or click the link in our bio from our Instagram page, Halisi Consults, or go to our website, www.halisiconsults.com, to book a free consultation from there. Whichever one works for you. We're always ready to help small businesses and startups launch, grow, and thrive. So yeah, if you don't have any more questions for me, I'm just gonna end live here. But thank you for your interest so far, and I really appreciate the participation. It felt like there were a lot of people here. Okay, that being said, have a great week, everyone. Bye.